Home selling, step 7, weigh offers on your home beyond price. When offers arrive, many sellers assume the hard part is over. It is not. This is a stage where outcomes are decided because the best offer is not always the highest number on page 1. In Texas, an offer is not a price. It is a bundle of risk, timelines, financing assumptions, inspection leverage, and buyer behavior. Your job is not to choose the offer that feels flattering. Your job is to choose the offer that is most likely to close on acceptable terms. Price matters, but price alone tells you very little. What you're really selecting is a probability of closing. Earnest money is one of the clearest signals of seriousness. The amount does not have to be large relative to the sale price, but it has to be large enough that walking away hurts. $30,000 on a multi-million-dollar sale may be a small percentage, but it is not throwaway money. Buyers who put real money at risk behave differently after inspections and appraisal. Earnest money does not guarantee closing, but unusually low earnest money increases walkaway risk. The option period matters more than many sellers realize. A long option period gives the buyer time to shop other homes, develop doubts, and negotiate aggressively. In this market, 10 days is common because inspections often take that long to schedule and complete. Longer than that should raise questions unless there is a clear reason, such as a holiday week intervening. Once inspections are completed and negotiations are resolved, it is reasonable for a seller to ask to shorten or close the option window. That's not being difficult, it's protecting your leverage. Cash offers usually sit at the top of the certainty ladder, but cash does not mean hassle-free. Many cash buyers still inspect and negotiate. The strongest cash offers are those with limited or waived inspections and proof of funds. Even then, title and logistics remain. Cash removes the lender, not all the risk. With financed offers, loan type and lender execution both matter. Conventional financing is usually the least fragile. Government-backed loans, FHA, VA, and USDA, are common in Abilene and should be taken seriously, but they come with condition and appraisal constraints that affect timelines and negotiation. USDA Direct, if it appears, is slower and riskier than USDA Guaranteed and should be evaluated carefully. Not all pre-approvals are equal. Some are fully underwritten, some are little more than intake forms. Having your realtor ask whether a pre-approval has been underwritten is prudent. Strong local lenders tend to communicate better, solve problems faster, and understand local appraisal realities. Even so, no pre-approval is immune to buyer behavior or life events. You cannot eliminate risk. You can only choose the least fragile offer on paper. Understand this clearly. The offer price is the maximum the buyer is willing to pay before inspections and appraisal. After inspections, buyers often ask for the full cost of what they find. That's common. It's not personal. This is why preparation and pricing discipline mattered in earlier steps. They reduce surprises and keep the contract defensible. Inspection surprises still happen. Termites appear, plumbing fails, electrical issues surface. Even well-prepared homes are not immune. The goal was never perfection. The goal was to reduce leverage loss when problems appear. Appraisal risk is real. If value comes in low, the lender will not support the contract price. The solutions are limited: buyer cash, price reduction, a negotiated split, or a dispute that may or may not succeed. Higher down payments provide flexibility because the buyer may absorb a shortfall without breaking the loan. Providing a defensible pricing narrative and documented improvements reduces appraisal randomness, but nothing guarantees outcome. How offers are presented matters. If you have multiple offers, you should see them together in writing with terms clearly summarized: price, financing type, earnest money, option length, requested concessions, closing date, and any special conditions. This prevents decisions based on emotion and timing instead of structure. Do not sit on offers without a plan. Buyers who are serious are also looking elsewhere. You can reasonably take a day to organize and respond. Waiting longer increases the chance that buyers move on or terminate. Momentum cuts both ways. Personal letters and emotional appeals should be handled cautiously. They introduce legal risk and provide unreliable information. Buyers can misrepresent intent, and sellers cannot control what happens after closing. Decisions should be grounded in objective terms: price, risk, and likelihood of funding. Never agree to a leaseback lightly. Pre-closing possession turns buyer regret into your problem and creates insurance liability and enforcement risks. This is one of the most common sources of seller regret. You hired a realtor for advice and judgment. You should listen to that advice even when you do not like it. You do not have to follow it, but you should understand it. Also, you should never negotiate directly with the other side. Just as you would never meet opposing counsel alone, you should not bypass representation in a transaction designed around leverage and deadlines. When offers reflect the traction you saw in the first week, they are usually safer than offers that stretch beyond what the market signaled. Fatigue distorts judgment. The longer the process drags on, the easier it becomes to accept risks you would have rejected earlier. Weighing offers means accepting that certainty has value. The cleanest deal is often not the highest number. It's the one that closes with the least damage. If you chose correctly here, the rest of the transaction becomes manageable. If you chose poorly, the next phase becomes fragile. In the next step, we move under contract, where timelines compress, inspections begin, and real negotiation happens. That is where many deals fail late and where disciplined decisions here pay off.